All right, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis. I'm the co-host, and with me, as always, is the one and only AJ Brown. Good morning, AJ. How are you?
I'm doing well. I'm doing well.
That's good to hear. I mean, Friday, October 15th, 2 weeks away from Halloween, 2 weeks away from your baby's coming due soon, right?
Baby's coming soon, but even more, guess what's happening today? October options are expiring at the end of the day.
Ooh, okay. So that means you got a lot of ideas, you got a lot of strategies,
That's
but
right.
the main topic of today's show is basically to talk about inflation, right? Inflation is all in the news right now. Commodity prices are going up, other prices are as well. Our main man at the Fed is giving some feedback, and so what do you think is going to happen? What are your thoughts on all that?
Well, so you can't, it becomes a guessing game, doesn't it? And that's what Wall Street's trying to deal with right now. They don't know what's going to happen. I mean, already he has hinted that quantitative easing is going to slow down. So that I don't know if people know about this, but ever since the pandemic started, the Fed has been purchasing bonds. And what does that mean? It means they're injecting cash into the economy, and they're hinting that they're going to slow that now. They're saying that because of fears of inflation, they're going to stop buying these bonds, stop injecting cash into the market. They've injected trillions of dollars into the market through this method. And they even hinted at, not only slowing down, but maybe in the future here, raising interest rates. That's another lever that they have. And that causes Wall Street, Wall Street prices these things in. And then Wall Street reacts, and it creates a very volatile market. I can guess just like the best of them about what's going to happen next. But, with option trading, option strategies, we have extreme flexibility in dealing with this stuff. So it's less about guessing what's going to happen next and more about applying the right strategy no matter what happens, right?
Yeah, and that's kind of the main premise behind your trading strategy is uh you can have a lot going on in the market, up, down, sideways, down a lot, but your strategies play into a longer game. So, what are some of those strategies? Is it just one or
No,
okay?
so the scoop is like when you think about buying stocks and selling stocks or buying commodities or selling commodities, what are you doing? You're buying and hoping that the price goes up so that you can sell at a higher price. Or if you have the luxury to be able to short things, you're shorting it, which means you're selling to open, and then you're going to buy it back at a lower price and keep the difference, right? So it's called directional trading. But right now, it's a kind of a fool's error to try to guess, right? It's literally spinning the wheel of fortune and deciding whether it's going to go up or down. It can change on a daily basis. I mean, I'm showing the S&P 500 on my chart right now, and the Elliott wave people out there are going la la because this is a perfect Elliott wave pattern, but in reality, we really don't know, what the heck is going to be happening next. And when it comes to implied volatility, the volatilities that people trade, um, who knows? Who knows? So we know is that things are getting uncertain. I think that's what we can do. The parameter that we can really focus on is uncertainty. And uncertainty is going up. Comfort is coming down. And with options, right? I think some mathematician said that there's about 27 different ways to trade with options, and we need to trade. And one of those parameters is uncertainty, or for you academics out there, implied volatility. So if uncertainty is up, one of the things we want to do is sell that uncertainty, sell that implied volatility because it's up, right? We always like to sell when things are high, buy things back when they're low. So that's the strategies that I think we need to be using right now, because that's the only thing that's solid, is that uncertainty is up. So if we sell uncertainty, and especially use options that expire worthless with time, we sell at a really high price, and then these things expire worthless with time. In other words, let's sell premium that is optimized for time passing by.
All right.
Those are the strategies that are going to work. Specifically, I like doing things like covered calls, covered puts, diagonal debit spreads. Those are some strategies that are going to work like fire right now.
So you said at the beginning that today was options expiration day. So that means that trades that you put on a week ago, 2 weeks ago, how far back are they? Are they most of them ending today? What's the big importance of the expiration specifically to how you were operating?
Today is paycheck day, which means that we sold options about 3, maybe 4 or 5 weeks ago that expired today. So it's like selling or selling that coupon, right? Today's the expiration date. Either people are going to cash us out of our coupon or not. But we sold this coupon 3 to 5 weeks ago. We get to realize its value today. So today is paycheck day.
And that allows you to now go back to the charts and set up your next set of trades. And so, what is the next date that you are looking at from here on out?
Well, now there's weekly options, so we can literally get this down to every Friday. But I personally focus on monthly options. My group, folks that are trading in my program, they do weeklies, they do monthlies. I personally focus on monthlies. So that means it's always the third Friday of the month that the monthly options expire. So this happened to be the third Friday of October. The next third Friday is going to be the third Friday of November. That's November 19th.
All right. So then, looking at the chart, right? So you have your date out into the future of when you can start to look at options. Looking at the chart, like the overall chart, is this week's jump, is that a result of the inflation chatter?
I mean, again, it could be any number of reasons, and as a investor or as a trader, I don't really concern myself with why things are happening, right? I want to be more reactive. I know that the folks that are moving the market, and I'm fully honest with myself that I know that with my portfolio, even though it's in the 7, 8 figure range, that I'm not moving the market. I don't have the billions that the, hedge fund, pension fund, all those different fund managers have. So my goal is to ride on their coattails. My goal is to identify that, hey, this just happened. This is a tradable event. What strategy can I use to profit from this tradable event with the least amount of risk possible, right? So I don't necessarily care what happened in the last week or two that made the markets dip down and then pop back up in the last couple of days. I just want to notice that it did pop up, and that's a tradable opportunity, right?
Yeah. So the example that we have set up for this week
Yep.
is Mattel, the toy
The
manufacturer.
toy manufacturer. Now, I want to actually go back in time a little bit. I've got a log here. You can see Mattel, and Mattel has been doing some nice sideways channeling for a while here. And this is like the perfect strategy for selling this premium, right? Let's talk about Mattel, a company. It's a toy manufacturer. It's not going to be, you know, uncertainty is not going to be affecting Mattel. It's actually a kind of boring company. Maybe around the holiday season, it's going to get exciting with whatever new toys it's released. But for the most part, as you can see here, investors are just stoked that you know, Mattel exists and gives dividends, right? That's what the investors are interested in. This is perfect for us to be selling premium on, right? This is the ones where we can sell some option premium and have it either expire worthless or knock us out for a little bit. But nothing unprecedented is going to happen here. So let me show you. I got 2 different trades I want to feature, and then I want to tell people about an upcoming trade on Mattel. Uh, this is one that I did back in May, right? And let's take a look at the chart really quick. If you take a look at the chart here on Mattel, I'm going to go back to when I call Mattel having a little bit of a personality change. So I'm looking at a 1-year price chart on Mattel. You can see that Mattel was trending up until probably right around here, and then it just started to hover sideways. So what I might do is I might draw myself a little trend line from when it started to go sideways, and I can see that it sort of has a little bit of a downtrend, as you can see here by this red line I just drew on my chart. Now, with that downtrend, that means if I want to get my strategy following on all cylinders, and I don't necessarily, because it's such a slight downtrend, I could do covered calls, or I could do covered puts, or I could do the variant of covered calls, which is a bull call diagonal debit spread, or the variant of covered puts, which is the bear put diagonal debit spread. I could do any of those strategies, and I could profit fat, dumb, and happy on Mattel. But because it has that slight downtrend, and I always like my strategies to fire on all cylinders, right? I like to do covered puts or bear put diagonal debit spreads. And so let's take a look at some of the examples that I've got here of trades that we've done. So this one went from May 10th to June 18th. So on May 10th, I shorted some Mattel, 500 shares. Put me in a margin requirement of about just over $10,000, close to $11,000. On May 25th, this is 15 days later. So I want to emphasize that because I'm not doing crazy active trading. In fact, I always set my trading platform to do automatic trading during the day, and I just come back in the evening. So on May 25th, my automatic trading platform sold some of the Mattel June 1950 puts, right? Sold my premium, made me 35 cents a share, $171.75. And at the same time, actually, that was I believe on a Friday, and on the Monday, I bought some protection because I always like to protect my stocks, right? Protect my trades. So I bought some protection. I bought the October 22 calls as protection for $1. Now, fast forward, June 3rd was when I didn't need that protection anymore. I could roll it out. I sold those back. So it protected me all that time. But here's something that is very unique to the Trading Trainer way. When we didn't need the protection anymore, we actually sold it back as a profit. Most folks who protect their positions actually are protecting them at a loss. Here at Trading Trainer, we always look to make a profit on the protection, a kind of a frosting on the cake, Sib. June 18th was our payday. We wound up realizing those premium. When all was said and done, we had a trade that went from May 10th to June 18th. And I emphasized the green transactions because those are the only transactions I really did. Everything else my broker did behind the scenes. So May 25th, May 28th, June 3rd, and then on June 18th was my payday. I walked away with 12.9% ROI.
And that's like a month. That's like 30 days, 3 trades, low risk, right?
Extremely low risk.
And then this was Mattel. So what you're saying is you're looking at a similar setup as to this trade at the beginning of the summer?
Yeah. I mean, I did one on August 12th, almost following the same exact recipe. This time I walked away with 9% from August 12th to September 17th. Again, September 17th was the third Friday of September. That was my payday. I made 2 sets of income, and I literally did only 4 transactions in this case, all a few days apart. Again, I'm not actively trading. This is kind of like, it's not much more difficult than just buying a mutual fund. But instead of with the mutual fund where I'm making maybe 4% a year, here I'm making 9% in about a month, right? This is what we do here at Trading Trainer. So yeah.
So let's go over this example now of the setup, right? The one thing that I like about Mattel is its price. It's got a pretty good price at like $18 to $22, where it's not too cheap, but it's not like
Not
super
too
exorbitant.
expensive, right? If
Exactly.
you've got a portfolio of about 3 grand, you could totally do an investment on Mattel right now. The risk that we set up on this is so low. So we just identified a bottom here. This is a perfect opportunity for doing some covered call writing. Covered call writing, brokers love it because they consider it to be very low risk, and we're going to always protect it, right? So when we buy our symbol, which is what we should be doing, and again, timing, we talked about this back in episode 1 last week. Timing is not as important as it is with, say, a directional strategy or a volatility strategy. And the directional strategies and the volatility strategies right now are just completely, it's a guess, it's a gamble. Whereas this, I'm literally letting the clock pay me here. The third Friday of November, payday,
So
right? So
walk me through what that setup looks like.
we're gonna buy some stock.
Right.
Now
At
is about
about 1983 is where it's at. Or
that's where it is right this minute. If we can get it for 1950, anywhere between 1950 and 20, perfect time.
and we're gonna call it 100 shares to make it easy.
Yep.
Okay.
We're going to wait patiently for it to show us a top. When it shows us the top, we're going to sell our call premium, and at the same time, I'm going to buy my protective option. In the meantime, I'm just going to have a stop loss in place. So I'm going to wait maybe a week or two. If I see a top earlier, that's fine. Week or two after a little bit of appreciation, sell that call, buy that protection, and then just wait patiently for the third Friday of November.
And then are you looking at anything in the calls specific? Because I know that calls can get pretty complex with their expiration dates, their prices, things like that.
I mean, there's a whole science behind it. That's what we do at our program is we decide what strike prices to do. But in reality, what you're trying to do is just bracket this channel, right? So if I was to simply draw a line kind of parallel to this computer drawn best fit trend line, something like this. Let's see if I can nail that a little bit. There we go. And then I just simply move it to identify where the top of my channel is, where the bottom of my channel is. There we go. Here's the top. And then I duplicate it. And I do one at the bottom, like so. I'm just going to bracket it. I'm going to put my protective option down below this line. I'm going to put my sold option, my premium option above this line. That's the safest way to do it. I mean, again, we get into it, and I don't know if you've got the program workshop on it. People can go and check out the workshop that we've got pre-recorded for people to check out and understand exactly what we're doing here. But it really isn't rocket science. In fact, we hand everybody a tool, a worksheet tool that basically creates this plan, this step 1, step 2, step 3. It's as easy as that. Those 3 positions that I showed in my spreadsheet a little bit earlier, it tells you exactly what you're looking for on each of those days and what positions to trade, what options to trade.
So from my knowledge of options, what you're doing is a spread. Is that correct?
Well, the protection is somewhat creating a spread, but really what I'm doing here when I'm doing a covered call is I'm selling that call premium and then I'm protecting it with an out of the money put, right? And that put doesn't really kick in for protection until it's needed. But in the meantime, it's an out of the money trade that we can, when we don't need it anymore, sell it back at a profit. That's my secret sauce, by the way.
So you're collecting the coupon and then you're
Collecting the
buying a little bit of insurance.
and I'm buying some insurance that I can sell back later when other people want it more.
All right. So then this is one stock of a variety that you have in play at the moment. Is that correct?
That's correct.
And that's something that you and your students basically review once a week in a group setting where people throw out ideas. You give out all the trade signals.
That's right.
When's the next one coming up?
Every Thursday evening, So every Thursday evening, we all get together in a big giant workshop, remote workshop. So we're all remote. People throw tickers at us and we pull them up, symbols like Mattel, and we actually evaluate them in real time for the folks and we pick one of them. So first we go through and we review. Usually we get somewhere between 10 and 15 symbols on a Thursday. We review them all and then we try to sift it down to the lowest hanging fruit. Now, a lot of times, like last night, we got it down to like 4 that were going to be fantastic. But for time purposes, we pick one of them and we usually vote if we can't decide which is the lowest hanging fruit, the best of the best. We pick one and then we plan it out together. Everybody pulls up their worksheets. We all fill out the blanks and we all walk away with a plan. And you can fill in, the risk tolerance depends on your portfolio size and your appetite, right? And so everybody's worksheet can be tuned specifically to their, risk appetite and their portfolio size. So everybody walks away with a specific plan made, prioritized down to exactly what their needs are. It's awesome.
Well, me, I'm still learning these things as we continue to work together. But for anyone else that's interested in learning specifically about the strategy, about Trading Trainer, about the Thursday workshop, we suggest you go to the link below or the link that's broadcasting there, optioninvesting.org/workshop, and go ahead and watch AJ's webinar. It's broadcasting, I believe, every 30 minutes, something like that. And then after that, there's instructions on some of the things that you can do to start to implement it, but also how you can get involved with AJ directly.
SIP, the workshops cost nothing. People should, without a doubt. And we have updated examples in those workshops. We update them every month. So people should definitely take advantage of that complimentary workshop. It's about, it's got all the details of the strategy. And then if they want to work with us in a group, that's cool. At the end of the workshop, we tell you how to do that.
So since we're going to be continuing to do, this show every Friday, when do you think we should check back in on that Mattel trade?
I think that it looks like it's going to be, looking at how fast it's been going up in the past every time it goes up. It looks like in about 2 weeks, we'll be ready to collect some premium on this. So I think every Friday we should start keeping a running list and just check back in on these symbols that we feature.
Yeah, of course. I'm gonna definitely add it to my watch list.
And I think
And
that means that whatever platform people are on, they should subscribe so that they can come back and see how these trades are turning out.
yeah, because you just need to hit the subscribe button, right? The follow button, the
Subscribe
like
and make
button.
sure that you sign up for your notifications so that the platform can tell you when we're having our next show. Of course, we're going to have them every Friday, but it's good to have the platform remind you, right?
Yeah, and I know you're really good at getting back to people too. So if anyone has specific questions, drop them, and we'll get them to AJ and see what his opinion is on some of these things.
Absolutely. In fact, that's
And
one of the big features of our program that people, why people join our program is they can, after, besides what we do on the Thursday, if they go off, for instance, with those other symbols that we didn't have time to plan during the workshop and they plan them on their own, they can send them our way and we'll review them and give them any sort of feedback, any sort of pointers on what needs to be tweaked before they go and execute the plan with their own real money.
yeah, so before we end the show, for anyone that's new watching or isn't interested in implementing this, what do you think? And you mentioned this earlier. What is a good? How much of a portfolio size should one have before they can start to go in and do some of these things that you're showing?
I've seen folks in my program start with as little as $800. However, There is a sweet spot, and I would say the sweet spot starts at about $3,000 to $5,000 investment portfolio. If you've got $3,000 to $5,000, I don't know why you've got it just sitting in a bank or why you think you're doing well with just like some ETFs or some mutual funds. If you're not selling premium, I mean, it's so low on risk, low on the amount of time commitment you have to make, and the returns are just so significant, right? Like every month we're making close to double digit returns, if not more.
Well, so is there a time limit on those expirations today? Like, is that all those gonna kick in like
They all
2
kick in
hours?
at market close, man. They all click in at market close. Everything expires, and whether you get exercised or whether you're going to just expire worthless, it's all going to work out for us. The way we structure, the way we design these trades, it doesn't matter one way or the other. We profit in every scenario, and that's what I explained in that workshop that people should sign up and be part of that complimentary webinar that goes every couple of minutes.
Awesome, awesome. Well, I think that should cover it for today's episode. We talked about inflation. We talked about the Mattel trade. We're inviting everyone to the workshop, and so yeah, we got a pretty good, decent turnout today. So we appreciate everybody tuning in and everybody watching and everybody listening. Be sure to follow AJ on Facebook, YouTube, and Twitter. As you know, he tries to teach the world this wonderful strategy that benefits a lot of investors if they just take the time to learn.
Closing thoughts, right? When inflation goes up, or even when talk of inflation goes up, you got to figure out what that parameter is that is reliable. And the parameter right now is that uncertainty is high and it's going up. And so options are the only way to trade uncertainty. And selling premium right now is like the smart thing to do. And so I'm going to leave you with that.
All right. Have a good weekend, everyone.
Take care. Bye.